Welcome back to the Dividend Diplomats YouTube channel. You've got your boy, the one, the only, Bert, the Hurt Locker, and you know you're rolling with Lanny. And we're here to talk to you about the pharmaceutical dividend showdown you've been asking for.
Everybody's been asking. It's time, it's WrestleMania, but also check out our shop before you subscribe to our channel and you give us a thumbs up so that you can possibly get your own Dividend Diplomats coffee mug for your spouse, significant other, or even yourself for this holiday season. But now that you've checked out the shop, smash that subscribe button and give us that thumbs up, everybody. It's showdown time. We're doing battle royale style. We got 3 pharmaceutical giants that we are going to run through the Dividend Diplomats dividend stock screener to see which one comes out on top or if multiple ones are stocks to buy today.
You know, we heard the comments, we read the tweets, and we're going to bring it out to you here. We're going to put together in the ring in a triple threat match Bristol-Myers Squibb, BMY, Pfizer, PFE, and AbbVie, ABBV. 3 high dividend yielding, dividend growth stocks here that potentially are great dividend stocks to buy for your stock portfolio. You know, I know a lot of people want to get into that pharmaceutical sector, and these could be stocks to consider buying now here in this month of November.
That's right. So in this video, we're going to use prices as of Friday, November 5th close. So please keep that in mind throughout the video. But this has been a very interesting sector of late. There's been a lot of news as we keep talking about the vaccines, the booster shots, and different remedies that each one of the pharmaceutical companies continue to announce and release to help fight the COVID pandemic.
That's right, and these companies are full front and center, you know, specifically Pfizer, especially with the recent news with the pill that they just came out with. The others are, you know, in their own rights, popular by their own other brands, such as AbbVie and their Humira drug, which I think I saw 2 or 3 commercials with my wife last night over.
And don't forget Botox too for AbbVie. That's the quiet supplement to Humira there to help offset some of their...
that you get every month.
Yeah, every day. What are you talking about? Every single day.
We're looking
Gotta keep this smile fresh right here.
Get out of here. All right, so there's 3 dividend growth stocks here. You know, and again, we're looking at these 3 dividend income stocks because you were asking for it. A lot of comments are asking, what about BMY? And we wanted to put them in the video, but might as well stack them against a few of their other potential competitors in the same industry.
And truth be told, what we found in 2021 is the pharmaceutical sector offers a lot of great value and high dividend yields too. A lot of these companies have been stocks to buy at different points throughout the year as their prices kind of hang tight. Some of them have shot down, some are shooting up, but even with that, you're seeing strong earnings growth. Yeah, the Botox right here in the cheeks too to keep the smile alive, but hey.
And Bert said it, not me.
So Laney, how are we going to evaluate these 3 stocks against each other?
Quickly, we're going to use our dividend stock screener focused on 3 dividend stock metrics: your price to earnings less than the S&P 500, as well as comparatively against these stocks in the battle ring. 2, the dividend payout ratio, preferably less than 60%. Bert's favorite ratio, though, is that perfect payout ratio, which is between 40 and 60%. That 3rd metric is dividend growth, really looking at the history of growing dividends, as well as how fast or how strong are they growing it, at what rate. And then lastly, we'll chime in with that bonus metric, the dividend yield.
Yeah, it's exactly right. So we're excited. We're getting ready to roll here. What do you think, Laney? Is it time to start this off? Yeah, let's warm up here.
Get your coffee, get your beer, get your water, your glass of wine. It's go time. So, Bert, we're going to start things off with the company that everybody has been asking about, Bristol-Myers Squibb, BMY.
All right, their price as of 11/5 was $59.45. Their forward earnings of 2022 estimate are $7.83. That gives you a low PE ratio of 7.59. Fascinating.
7.59.
That's going to be hard for the other 2 companies to beat. So let's look ahead, Laney. You want to talk about Pfizer?
So Pfizer, again, as the other dividend competitor here, they were currently trading at, after they shot up 10% on Friday, November 5th, they're currently now trading at $48.62. Looking at the analyst expectations, we actually went over to Seeking Alpha because on Yahoo Finance, analyst expectations for earnings for Pfizer and for Pfizer's stock was over like $35 per share.
Something's got to be wrong with that.
We're not using that. So we're going to use $4.21 from Seeking Alpha on Pfizer stock. Doing that, their P ratio is a very reasonable 11.55.
So AbbVie, their price, $117.18. Divide that by forward earnings of $13.93. Gives you a PE ratio of 8.41.
Ooh.
So of the three, BMY is the lowest at 7.59, followed by AbbVie
Yes,
at 8.41, and then third is Pfizer at 11.55.
You know, if you actually think about Pfizer, they just shot up 10%. You know, if you actually reduced it back down, they would still be the highest price to earnings ratio out of the three. All three are undervalued versus the overall market, which is trading at about 29 times earnings. So all three look like they're undervalued. Obviously, Bristol-Myers Squibb is crushing it.
Yeah, so let's move into that second metric, the dividend payout ratio. BMY's annual dividend is $1.96. Divide that by 783 earnings. That gives you a payout ratio of 25.03%.
Only 25%. Plenty of room for Bristol-Myers Squibb for them to continue to grow their dividend. Dividend is very safe here. Actually falls even below that perfect payout ratio at 40 to 60%. But that's because, hey, they're putting money back in the business to continue to develop products for you.
Pfizer, annual dividend, $1.56. Divide that by the 421. That gives you a slightly higher payout ratio, but still fantastic payout ratio of 37.05%.
Very safe as well. Now AbbVie, which we'll get into later on in the metrics, but AbbVie, again, ticker symbol ABBV. This dividend stock has a current dividend right now of $5.64, annually. And you take that over those earnings of $13.93 of expectations, slightly higher payout ratio than Pfizer. AbbVie's payout ratio is just over 40%, but in that perfect range, Bert.
Yeah, so all three clear winners from this metric, but BMY with the lowest of 25%, PFE 37%, and AbbVie at 40%. But I like them all right now.
It's like Pokemon. You got to catch them all sometimes.
All right, third metric here, dividend growth. For this, we're going to look at each company's 5-year average dividend growth rate and how many consecutive years they've increased that dividend.
This is where it's going to get a little bit interesting, I think.
Yeah.
Because we're going to start with Bristol-Myers here, Bert.
Let's do it.
And their 5-year dividend growth rate on average is actually kind of low versus what you'd expect with that payout ratio. Their 5-year average is only 5.27%. But I have to comment that their last increase was way above that. It was at 8.9%. So again, that average is slowly going up with that last increase in 2020.
Yeah, and they've increased that dividend for 11 years too. So they're building a nice little streak on their way to becoming a dividend aristocrat, which is a company that has increased its dividend for 25 consecutive years.
And to go on record, the last two increases were around that 9 to 10% mark.
Nice. That's a good call out there.
So,
let's talk about Pfizer here.
5-year
dividend growth rate's just under 6%. It's 5.75% as well, and they've increased that dividend for 10 consecutive years.
What's interesting about Pfizer's growth rate right now?
Yeah, they have that hidden dividend increase in the year that doesn't get reported, but it was actually very large. What is this that we're talking about? Earlier in the year, they spun off Viatris. Actually, it was the end of 2020, right?
End of 2020, that closed in Q4. They spun off Viatris, which is ticker symbol VTRS.
So typically when you have the spin-off, because you're spinning off some earnings, some revenue, some cash flow, companies will split up the dividend and they'll reduce it, but it's not, so Viatris will get some of their dividend, Pfizer would typically get some. Overall though, you're gonna reduce what will be paid at PFE. What happened though, Lanny?
Pfizer says we're sticking to our payout ratio, our dividend payout right now because they were just doing so well. Obviously, the COVID-19 vaccine shots did very well for Pfizer's stock and their performance financially. So the dividend they actually maintained at the same level pre-spinoff with Viatris.
Yeah, so it's not reported as a dividend increase, but it actually is one because your Pfizer dividend did not decrease the way it should have, as most companies see when there's a spinoff.
Happy shareholder.
Yeah. So let's move to AbbVie.
Let's hear it.
All right, their 5-year dividend growth rate is 18.44%, and they've increased that dividend for 7 consecutive years, though. So, Lanny, they also just announced a dividend increase. Do you want to tell us a little bit about it and where it compared to that 5-year average?
Their last dividend increase actually was way less than their 5-year growth rate on average. It was actually around 8.5% for AbbVie. So, not like how Bristol-Myers, which is outpacing their 5-year average, or Pfizer with the hidden increase. AbbVie is slowing down a little bit.
And that's interesting because, yeah, their dividend has shot out of a cannon since they were spun off from Abbott in, 2013.
Yeah.
Maybe now we're seeing AbbVie with, the law of averages, where it's just got to come down eventually to right size in this market.
And during the pandemic, they increased at 11%, which was higher than the year before that, 19, which was 10%. So they went from 10%, 11%, 8.5%. So with AbbVie, the payout ratio is not what it looks like at the 18% on average. It's probably in that 7 to 11% range.
I think that's fair. So when you consider that, they still have the highest dividend growth rate of the bunch, but it's closer in line with Bristol-Myers 5.27% 5-year average, and then Pfizer's 5.75.
And AbbVie has continued to increase it ever since they were spun off from Abbott Labs.
Who was a dividend aristocrat too, or who is a dividend aristocrat? Let me rephrase that.
Boom. So now, Bert, let's look at really that fourth bonus metric, the one that sweetens the deal a little bit, the dividend yield.
So Bristol-Myers yield is 3.3%. Very nice.
Not too shabby, actually, for Bristol-Myers. Pfizer's dividend yield on this hand is actually less than Bristol-Myers. They're coming in after that 10% surge again because stock price goes this way, yield goes down, 3.21%.
All right, AbbVie, clear winner here, 4.81% yield, which also is coming down because they've had a recent increase in their price. At one point, they were touching 5% earlier in the month.
I would agree with that. They're actually, trading in the low 100s earlier.
Yeah, we grabbed a few shares, so it was nice.
There you go. So the yield, Bristol-Myers came in second on the yield, Pfizer last at 3.21, and then AbbVie first at 4.8. Kind of look at their stock performance a little bit, Bert. Out of all three, obviously Pfizer has performed the best in the year and, over the last 52 weeks. During the year, they've already gone up 32%, so great job to the shareholders. And you've actually got an increase of 41% of the stock price since last year.
Yeah, so Bristol-Myers is going to be the laggard of the group. They're down 3% year to date, and they're down 6.82% over the last 52 weeks.
Undervalued, maybe?
Yeah, so AbbVie, too, has been interesting. They started the year here. They shot up through a cannon. Earnings came right back down to where they started, so they erased all those gains, and now they're up 11% year to date after their recent appreciation.
And up 26% since last November. So, in order of performance, Pfizer has performed the best from a stock price appreciation standpoint, AbbVie second, Bristol-Myers third.
This is a fascinating analysis as we put the chart up here to show all three companies compared against each other, because if you look at them in isolation, each one of them, you would say each one of these stocks are undervalued dividend growth stocks to buy because they all have PE ratios below the market, great payout ratios, strong dividend growth, and great yields.
So out of the three, I would argue Bristol-Myers business is on the uptrend.
Interesting.
I say that because they're increasing their dividend at a faster rate than their average. The payout ratio is the lowest, so they're trying to reinvest more back in the business. And the stock price hasn't kept up with what the industry is doing.
Yeah, so of the three, I would agree. They're the screaming potential undervalue of the three because they are lagging the others. They haven't performed as well, but you are seeing that strong dividend growth.
What are your thoughts on Pfizer?
I like Pfizer, but their recent price increase, I want to see how it's going too. I'm happy I loaded up on them earlier in the year when we found them as a stock to buy.
A ton of Pfizer. Pfizer's been one of my longest term holdings for over 10 years, to be honest.
Yeah, and I also love AbbVie too. It's also a great company. So all three are great.
Loves AbbVie.
I do. I do.
He does.
Yeah.
So, and again, that's probably the best yield right now out of the pharmaceutical industry. So if you're an investor and you're like, which three should I buy? Say if you had $1,000, feel free to invest in all three.
Yeah. There's not,
obviously, you could, do your own research.
In the comment section, one person could say they like each one, and we could just write back and say, yeah, I don't disagree with the conclusion.
Yeah. I think one, you're getting yield. On the other hand, you're getting potential future better dividend growth. And then kind of that Pfizer investment, buying Pfizer stock, you're probably getting that like mic drop, releases like the vaccine and then the pill for COVID-19. You're getting a lot of these like very interesting products.
Yeah. So everyone, let us know what your thoughts are on these three companies, what your thoughts are on the analysis, and which one of the three you like, or are you kind of like us where all three look great?
All three look great. I'm currently not buying any of the three right now because I have so much Pfizer and AbbVie, and I also do own, and I have to look back at them, GlaxoSmithKline.
Yeah.
So I own a lot of pharmaceutical stocks. They're great dividend stocks to buy and hold in your portfolio. I've never sold a pharmaceutical. I rarely sell any dividend stocks, and hey, the two that I own here, Pfizer and AbbVie, have been great for my portfolio.
And if you haven't already, everybody, subscribe to our channel. Give us that thumbs up. Thank you again for all your support over the last year and a half.
Hey, again, this was Bert, the Hurt, and Lanny from the Dividend Diplomats.
Over and out.